Luter. I'm the treasurer here at the club for 2025, and I've been elected by the board as the president for 2026. So for those that don't know me, I've been a member, this year will be 30 years. So been around a little while, seen a few things, seen this clubhouse come out of the ground and the other one, you know, go away. And I won't tell you where I think it is, but it's probably down there somewhere. But you know, seen a lot of different things, met a lot of people. So appreciate everybody coming. We thought we would do a financial update for everybody, and I'll cover a few things in our annual meeting. But I wanted to, you know, focus on this a little bit. And we did this at our board meeting when we did the budget. We had an actual working session for an hour before that because I thought we needed to pay attention, you know, and not just gloss over it and move on. So what I'm going to do today is, or what I would like to do, is go through this entire slide deck, and it's 18 slides or so. And I think it'll give you a good feel once you go through all the different slides. I'm going to start out with about 4 slides that are just highlights of 2025. We got our financial statements yesterday, and we'll make those available to anybody that wants those via email and PDF. We'll send you one. We're also I'll send you this deck and the annual meeting deck too, once we go through everything. So you'll have all of this. It's live streaming here for those that couldn't make it. And that may even be on video, I don't know. So you've got the opportunity to have many different copies of this and different looks at it. So we'll go ahead and get started here. And I'm not the greatest technical guy in the world, but we're going to start out with some 2025 financial highlights, and then we're going to go into our forecast for the budget, okay? And I've tried to make this big enough. Tim, can you see this okay?
I can, sir.
All right. So these are just some highlights of our financial statements. And I will, like I said, we will send you the reviewed financial statements if you want those, and also this deck. But our total assets, as you can see, are for 2025 are $12,764,000. Total debt, $3,024,000. That includes the line of credit for the golf course. That's roughly $1.36 million, and then the commercial loan on the property. Our member equity is $6,925,000. We had an operating loss this year of $714,000, but we had excess of revenues over expenditures. That's a non-for-profit term for net income, okay, of $371,000. The reason we had that is because we had some assessments and we had some members, new members to join. That all counts into that total there. Our cash balance at the end of 2025 was $233,000, so a good cash balance there. So, like I said, our assets, they were up $1.8 million, and most of that was the golf course project. You know, I say most of that. That was, the golf course project is our biggest asset. The 1.8 million is not the golf course project by any stretch of the imagination. It ended up being $7,750,000. We projected back in October, I think if you remember at that meeting, I said it would be about $7,740,000 to $7,840,000, I think is what I said. So we hit pretty close to that number right there. Our debt, like I said, is up $1.2 million, and that's net of the borrowing and the repayments that we had. So the line of credit is $1.36 million. The commercial loan here at the club is going to refinance this year in March. So we're working on that, and the plans are to refinance that loan and the line of credit together, combine those two, with an estimated balance of about $3 million is what we're looking at for our total debt at that time. We're negotiating the terms right now. We've been talking about that a little bit. The anticipated structure is going to be a 20-year amortization with a 5-year maturity, around 6.25. That's what was estimated in their financial statements to get a current portion. So that's what we're looking at. And when you look at that and you compare it to our payment, I'm just going to leave that up there where they can see those numbers while I left up there. When you look at that and compare that amortization at that rate to our current amortization, the cash flow is about the same. It's about $22,000 a month, thereabouts. So doing a 20-year am will keep us on that stream there. So just want to let everybody know that. Everybody's aware we've taken some voluntary contributions. We have roughly $2.35 million in those on our balance sheet. That's up $656,000. We filled that complement of those, so we've got 20 voluntary contributors. And each year or each month we amortize dues on those. So in 2025 we recognized roughly $104,000 in those, and we're amortizing that amount down over based on dues for those members. Membership equity is up $371,000, and that's primarily the excess of revenues over expenditures. Going on to revenues. Our revenues this year were about $4.7 million, which is down from 2024, about $972,000. Dues were flat, about $2.9 million each of those years. Green fees were down $215,000, and golf shop sales were down $250,000. Our expenses were roughly $5.4 million total. That's down $542,000 from 2024. Most of our expense categories were down. Golf course was up a little bit, about $73,000. The clubhouse was up about $63,000. Most of that was salaries and some adjustments in depreciation. Our operating loss, $715,000, which is up $431,000 from the previous year. So continue to have an operating loss there, and that's going to be pretty normal for us, quite frankly. There, hopefully it's just not as much. Other income and expense was $1.1 million, and that includes assessments, new members. Assessments on the golf course renovation were recognized in 2024, so that's the reason our other income is down. And you'll see some slides that'll show these side by side here in a few minutes on that. So our excess of revenues and expenditures was roughly $371,000, like I said. So some parting thoughts on 2025. Positive things. Completed the golf course in the fourth quarter. The cost was about 3.5% above what we expected. If you remember last year, we had an expectation of roughly $7.5 million, and we were at 7.75. So feel pretty good about that. Debt on the golf course, in our projections, we were thinking we'd borrow about $2 million, and we ended up just borrowing 1.36. So feel pretty good about that. We continue to add new members before and even up to like a week before we opened the golf course. I think we had a couple of folks join the week before. So, good activity there. And Thomas is going to go through the member rolls at the regular annual meeting, and he'll give you a comparison between 24 and 25 on the member rolls. Some negative things, our operating expenses outpaced our operating revenues more than normal. As I said, club utilization was down in all departments. Food and beverage underperformed for the first 3 quarters, but we made a little comeback here in the fourth quarter, so that was good. Made some changes there. So that's an outline of 2025. I want to turn it over to Thomas for a few minutes to talk about the budgeting process that he went through, and he's going to cover just how we did it. So Thomas, I'm going to turn it over to you.
All right. To speak a little bit about the budget. So Obviously, there was a lot of thought that went into this from a lot of different people, including department heads and the board were a part of the ride the whole way. But the process essentially started around September using previous months up to that point. We were not fully operational, as everyone knows, without a golf course, so there were some challenges and some inevitable forecasting without full numbers. So 24 numbers were used, 23, all the way back to 20 to try to get this thing as close as possible based on where we're trending and what's happened in the past. So with food and beverage, we had TL that came up with myself to get to those numbers. Golf shop, again, myself was included, but Skylar was on towards the end of that process to make sure we're good with golf shop and moving forward. Golf course with Robert, tennis and pool, house, G&A, and dues and other was myself, and then that was all put together for a total budget. I think we went over 14 plus drafts to get this thing as right as possible. As it mentions at the top, with each month that went by after September, we used those months to try to get more and more accurate numbers until December, and our time was up and we had to finally put the stamp of approval on that. So we feel really good about where we are with the budget. It's been communicated in staff meetings to all our department heads the importance of following that budget, making sure that we're just being aware of what's being spent, checking it monthly. And I'm really confident about what our staff's going to do moving forward into, for an accurate budget to reflect in 26. Just to continue that talk, from that point, once it was constructed by myself and Mr. Luder here as the club treasurer, we continued discussions to make sure again that all department heads, we were all on the same page and had a certain amount of expectations and accountability for our budgets that we were putting forward. Those were presented to the board during the December board meeting for approval. We had an hour before the board meeting discussion, as Mr. Luder alluded to, just to go into great detail of how we got to those numbers based on increases, decreases, you name it, we went through it. And that was all discussed for the board to have a good understanding of what they're approving. And then that led, of course, to that final bullet of the board approving for a dues increase at the December meeting, which the members were notified the following day. That's how we got through the budget process, and I'll turn it back over for some more detail, Mr. Luder.
All right, so what I've done here, I talked a little bit about the numbers in a summary type format on 2025. So you can see 24, 25 in our forecast for 26, okay? And as I mentioned earlier, the dues line pretty flat. You can see it's real flat. It's exactly the same rounded on that. So, our total revenues in the 2026 budget decreased from our most recent year of full club operations. You can see our most recent year of full club operations were 24. So that's why that's presented out there. The dues line, it anticipates 11 new members and the increase in dues across all member categories. There's some declines in restaurant, bar, and golf shop levels, and they're based on what we believe we're going to have usage of there. And if you'll notice, green fees are way down. From the last full year, they're roughly, last full year we had about $220,000 worth of actual green fees. We're at $69,000 is what we're projecting for 2026, and we're not projecting any tournaments or anything of that nature out here. It's just going to be the family guests up to summer of 26 right now, and we'll see about other guests at that point in time. So going on to our expenses, I've got a really big, I made this really big for Tim White here. Can you see that, Tim? That's
Barely.
barely, okay, all right. So This is our expense budget and actuals for 2026. And I've got some other slides here that are behind that you'll get when we send you this that has some explanations. But total expenses in the budget increased from our most recent year of full operations. As you can see there, it goes, the last full year was, this may be easier to see. I don't know if you can see that any better or not. Which one do you like better? This one or this one? That one right there? Okay, all right. That's why I put that in there, because I want to make sure you can see that. So, restaurant and bar, this, in 2026, we're anticipating a $302,000 loss, which is down from 709. So, you know, we went back and forth through that a whole lot, and, you know, looking at just different activities and different you know, outside events that we knew about, trying to work all that in. So we feel pretty good about that number. Golf course expense, it's up. You can see 24 is $1.2 million. Last year $1,273,000, and we've got $1,794,000. And you go, well, that's a lot, but $200,000 of that's depreciation. Okay, so that gets you to $1,594,000. Labor's up about almost 200 at 190, and some of that's raises and incentives for employees. Our employees there hadn't gotten a raise since 2023, so we need to make some adjustments there. Chemicals were up about $60,000. That was one of the bigger items, and then we've got a new equipment lease that's starting in March, I believe. Is that right, Robert? For March, with some new equipment for the golf course, and that's up about $60,000. So, you know, that's the reason for that increase there. If you go look at the golf shop budget, I'm not, the golf shop cost of sales is just a function of what we think we're gonna sell. So I'm gonna skip that and just go straight from golf shop. You can see, you know, there's a disparity there between 24 and 25, and back in our forecast, pretty low there in 25, but if you look at our last full year of operations there, we do have an increase, and part of that, the cart lease increased about $32,000, and we had some increases in salaries of about $24,000. Clubhouse and G&A, I combined those two together to talk about that. There's some increases in salaries, clubhouse maintenance and repairs, and we've got some decreases in income taxes and also in professional fees there. Interest expense, it's on the bottom here. You can see that went way up. Now, I told you the payment was the same, but the payment's got a different characteristic. Most of it's interest now versus principal reduction. So that $187,000 there, I calculated that at 6 3/4%, and that's running the line of credit through March and then amortizing our difference down. So, you know, if we get a better rate than that, we'll pick up some. If we don't, we won't, but that's how that was calculated. So, and all of that's outlined for you, and when we send this to you, you can see those bullet points there. So other income and expense, taking a look at that, initiation fees, you can see that line, we're looking at 11 new members. That's at $42,000 a piece. Don't have anything else in our forecast for 2026 as far as assessments, interest income, or anything of that nature. Just because it's not in the budget doesn't mean it won't happen, because we got to work through this a month at a time, but you know, that's not there right now. And I want to say a little bit about that. If you look at the interest income line and the earnings on this assessment here, and you look over here at our forecast, that's not there. We got to replace it. We had to replace it with a revenue source. Same thing with the member fees. So if you take the decrease there and the lack of that interest income, you know, that's a pretty big number to have to replace. That's $300,000 or $400,000. So just want to bring that to your attention. So in summary, we budgeted really a loss of about $380,000 for this year. Depreciation's $558,000. It went up from $366 in 2025 because of our golf course, the pump house, all the irrigation, all those kind of things. So that went up. We won't have any additional revenue from interest income or guest fees since they've been reduced from past levels. And our debt service coverage is calculated, it'll be 124 on this budget. And our current requirement's 115, which is very favorable for us at 115. Most folks require 1.25. I want to say this too to everybody. If you want financial statements any month, you are welcome to have them. They will be ready after the board meeting, which is the third Wednesday now of the month. They'll be ready for you on the third Thursday if you want. Go to the office, ask for them. There'll be a balance sheet, an income statement that'll compare to budget, and we probably will do a cash flow statement too, that you can take a look at, looking at trying to maintain our, just have some plans for our cash flow out there. You're welcome to them. You can have it anytime you want, okay? So we go with it at the board meeting. I just want to let you know that that's out there. So I'm going to turn it over to Thomas for a couple of slides here to go through kind of what our fees, initiation, et cetera are, and do some comparisons. We started from the ground up on this budget, looking at our expenses and what it'd take to run Stone River Country Club. But we also compared to other clubs, which we believe some of our peers and some aren't, but he's got a really nice analysis of that. So Thomas, I'm gonna let you.
Yeah, can I ask a question before, or should I wait?
Let's run through this, and then I'll get you, we'll get all the questions at one time.
And just to briefly go back on budget and talk of how we came to the numbers we did, a lot of that also included, there's great information that we have access to with Robert's organization and myself and Skylar's organization and General Managers Association and what other clubs are doing, what they're charging, what their losses are. So these numbers certainly just aren't made up numbers. It's something we're striving to do to get to that industry standard, which we think we can do. All right, and moving forward, this has all been shared already with membership. I know no one can really see this from here. This is available on our website. Again, it's been sent out to everyone. It's good information that of all of our fees that are reoccurring or one-time annual fees. Our membership initiation fee, as it shows there, is $42,000. That's come a long way, to say the least, even in the last 5 years. So I think it really speaks to the value that our members have with their current membership and what we have 19 members paid for in 2025. So we're expecting more, and that's a great sign of things to come there. As Mr. Luter alluded to, this is basically a conclusion of a very long, large spreadsheet that we have of each individual clubs and what they are charging their members and also what they're providing their members. I try to break it down based on initiation fee to try to make it as relevant to us as possible. This data was of November 2025, so at that point our dues were $625, now they're $725 obviously, but a lot of these clubs have annual increases which do not reflect in this, so there's a good chance that all these other numbers are a little down from what they actually reflect today. But I think the really important things to kind of point out and notice is what is highlighted here with the monthly total. So our monthly all-in before any usage or out of the ordinary locker fees or any of those kind of fees is $725 plus tax for a yearly total of $8,700. Clubs with initiation fees below $25K. So for example, on those clubs that were surveyed, that includes the Lakewoods, Riverbends, Temple Hills, Five Oaks, Greenmere, and Bluegrass Yacht. Their dues are lower than ours, and their monthlies are $621. It's the most important thing to look at. how this cart fee was put together, essentially there's a lot of different clubs that do a lot of different ways, whether it's annual, biannual, seasonally, monthly, all the way down to daily usage. So essentially that's a combination to get it to a monthly total. And what I did, I put 50 annual rounds for those that do a daily usage, just to get an estimate to get us to a number. So obviously those clubs, not all charge a cart fee, but the ones that do average that based on initiation fee. As we move into the middle from the 25 to 60K range, again, those are clubs: Nashville, Golf and Athletic, Old Hickory, Old Natchez, Tennessee Grasslands, West Haven, Vanderbilt, Governor's Club. We'll see, obviously it elevates their monthly total. The products reflects that as well, and it's a nice product compared to the fees that are 25 and below. It also reflects a space in Nashville that is elevated in terms of what you would expect to expend. Then you have clubs with initiation fees of 60K and above. There's not too much of a comparison there, obviously, but I do think it's important to show what people in the Nashville area are paying for the premium product. And those clubs include Billwood, Richland, Brentwood, The Grove, Golf Club of Tennessee, and Bell Mead. So obviously there's a lot of different factors that go into these numbers, and it's not always fair to compare us to others, but I do think it's important just for members to see what other clubs are doing in our area and in the greater Nashville area. This is also, as I've mentioned in emails before, the spreadsheet we have. It's available to members. I'm happy to share that at any point if you want a more detailed explanation of how these numbers were put together. Then we'll get.
Hey, Thomas, can I ask a question on that slide?
Sure.
We're saving questions, right?
Yes, sir. Well, I'll get to you then.
Last slide here, just kind of our trends on our dues from 2021. Why did I pick 2021? I don't have any real reason other than it was about 5 years. So, but you can see the increases over the years there that were out there. I also thought it was kind of interesting to show that we have had assessments every year. 1 year we didn't. The government gave us an assessment for a PPP loan, so we used that there. And fixed asset purchases I put there. Also, just for your information, operating losses. We had 1 year where we did have an operating income amount there, and then the restaurant and bar. You know, it's an amenity, and you know, you can see how that's kind of flowed through there as well. So just wanted to put that out there for you. And like I said, you'll get this slide deck, and you can, if you've got questions or anything like that, you can call me, you can ask Thomas. You know, we're glad to talk about any of it. So that's our presentation. I'm going to open it up for questions, and Mr. Fair over here was the first one, and then we'll get to Dick. So
Thank you, sir. So,
could you go to the microphone?
Sure.
And where everybody can hear your question? The SAMSU payroll.
Yes, thank you.
We got a lot of those.
We did not, if I understand correctly, we did not build into our budget revenues for guest fees coming in 2026. Is that for the whole year, or could that be built in as revenue for us moving forward?
We put $69,000 in there, and I'll flip back to this somewhere.
It's only family guests for the whole year, what's budgeted.
Yeah.
Which is what that 69 represents.
So we've got some guest fees in there.
okay,
And we're getting a few. I mean, since we've opened up, we're getting some guest fees.
I gave you some.
So, appreciate it. All right, Dickie, let me get to the slide for Dickie, and I'll let Thomas
This is
answer.
really not a
this question.
microphone-worthy question. I'll get over here.
You gotta follow the SAMSU payroll.
I tend to want to sing when I get one of these. Yeah, your slide there,
Yep.
the monthly total doesn't include the regular capital assessment for those clubs that are over 60 in initiation.
Yes, sir.
Correct, is that correct? That's correct,
Well,
correct?
based on what we surveyed, and the clubs that I listed there, none of those clubs have consistent recurring capital assessments, with the exception of the clubs that are 60K and above, which is a part of their,
Okay,
that is a part of their monthly total. But
right, so those are the better clubs in the area. And the point I was gonna make is, I'm a member of a couple other clubs, and they do the same thing, regular monthly capital assessments. That seems to be the trend. And in the state of Tennessee, we've talked about this, and those are not subject to sales tax, so you wouldn't get that 10% additional hit on top, basically 10%.
yes, sir.
Anyway, I've just made it, so $1,140, no, it actually cost you $1,370, almost $1,400 a month average for those clubs.
They're certainly doing a great job of planning for the future and elevating their club monthly.
Yeah, and I can assure you, they also have other assessments on top of that.
Oh, yeah. This is just part of their consistent monthly bill.
In your restaurant and bar revenue, Marty, when I looked at it on your budget, it looks very conservative in my opinion, which I don't disagree with. But as we all know, you don't necessarily put anything on the bottom line when you increase revenue in that department much, but because it's actually not a lot higher than it was this year when it closed out, 25 when it closed, right?
Yes, that's true, and we did lose a pretty big banquet, I know. We tried to tweak it as we went along, so, but yeah, I hope we do more. I hope we do more at a more profitable level. How about that? That would be.
I would think with all these restaurant people on the board, we'd do a lot better.
He's smiling. So to Dickie's point, I know there are other members that are in the audience here that are members of other clubs. And I know two of them for sure, and I've talked to both of them, and they all have capital assessments on a monthly basis. And one of the members I know, for instance, they have two capital assessments. They have I think it's called visionary, I think it's called the visionary capital assessment, and then their regular capital assessment. So I don't know what yours are called, but I know that those are very common items. And I'll say this about that too. It's been talked about. We've talked about that regular capital assessment. And it would be a great thing for us to start. But right now, getting out of this renovation and trying to get back going, this year, we just decided not to go that route. Now, again, as I said before, there's nothing that's off the table as far as pulling revenue triggers if we have to pull them. But we're hopeful, and we just closed out our first month this month in January. I hadn't looked at the numbers. We should be finished up with that sometime this week, but we're holding people's feet to the fire on these budgets, and we're going to do our best to stay within those budgets and get the product out there that we need to get out there. So, okay. I got two go. I'm going to go with the elder statesman first over here, Mr. Morris.
What, how are our prices on venue against other people? Because we've got a pretty exclusive venue here with parking and not, what are other people? Like Embassy Suites. Who wants to go to the James Union Building in MTSU?
Yeah.
I think we've got a better product out there to throw out there, and what is our price on the venue?
Okay, so to repeat the question, basically, what are we charging relative to other venues that are in the greater Nashville area. We did go through that whole process. TL and Valerie Wardall, our director of events, they called many clubs to see what they are doing. We're right in line with them as it relates to nearby, whether it's a hotel. We're slightly lower, to be honest, but I'm trying to get business as well, and that's part of it. But we certainly are making an effort to consistently charge people to rent the rooms that they're using that are not members. All of our members, part of membership, have free room rentals, but any outside events are consistently paying room rental fees to use the amenities that we have.
But we're cheap.
In some cases we are, but from a country club standpoint, we are certainly in line with others.
There's no other country clubs to compete with. I'm just saying, I'm asking against the Embassy Suite, people like that, are we in line with them or not in line with them?
I think we are in line to get the proper business that we're trying to get, for sure. Based on the research, I mean, it was an exercise that both of them went through at lengths to make sure that we were in line. And it did go up.
Venue?
The price to rent the room based on half a ballroom, a full ballroom, river room, you name it, it all went up substantially for non-members this past year, including food costs and everything.
Can I go? So the dues line goes up $600,000, right? 2026. Five. Okay, so a little bit less than 20%. How much of that was, and you say that includes 11 new members?
11 new members. It includes 11 new members, but it also includes when you think about it from a cash flow perspective, we're amortizing the lifetime members each month as well. So that's gonna be, out of that number, there's about $150,000.
That answers my question.
Okay.
All right.
And when you look at, if you get a set of the financial statements, if you want those, and you look on the cash flow statement, it'll show that number and it'll show it as a reduction in operating revenue, or operating cash flows. So take a look for that. And if anybody's got any questions, I can run you through that too, so.
So there's no emergency fund budget in here. So like, the tennis court needs to be redone, correct?
Yes.
Yes.
So if that money needs to happen, it's gonna be an assessment.
If that money, if we have to redo that, yes, it
Well, I
will.
mean, it's not if it has to be done, correct?
Well, we're taking a look at that right now, Chris. I've got some folks helping, getting some bids on that and taking a look at it. And a couple of things on that, we're trying to figure out, what the right way to do it is.
Yeah.
I mean, we could go out there and do it in a halfway manner and spend less money.
Yeah.
But maybe that's not the right way to do it. And we've talked to a couple of different vendors already, and Danny Wallace is helping me with that. He's talked to two vendors for sure. And we're getting a few conflicting, you need to do this, you don't need to do that, and we're trying to hammer that down, but nothing's been decided just yet on that. But you're correct. If we decide if we want to bring that to the long range planning committee, or the long range planning committee wants to bring that to the board and decide, yes, we will have to assess to do that.
And that number's somewhere around $500,000?
As far as I know right now, yeah, that's about what it is, but it could be more, it could be less, depending upon how we have to calculate, or what we have to do.
So we're not planning on doing that this year, but we might do it this year.
We could, we gotta evaluate that, yes. And in this budget, when we went through, you just saw the income statement pieces of this. Actually, we did a cash flow statement too, and we've got some monies coming in that are due to us from some of the lifetime members on the way that they paid for their membership. We've got the additional assessment that we had in, that we collected in January, so we've got some monies there. We ended up with $233,000 at the end of the year in cash, which, you know, obviously we have to pay payroll, bills, et cetera, but, you know, from an operating, not from an operating budget perspective, but from a capital expenditure perspective, we've got about $400,000 to $450,000 that we can play with there that we, you know, but when I say that, things break. The pool filter needs to be fixed right now. We put that off, you know, we found out about that in December. You know, that's $11,000 or $12,000. You know, you have different things that come up all the time, so you have to have a little reserve money to take care of some of these things that just break. This building, was built in 1999, and I know at least one, set of air conditioners, I don't know if it was, controlled in this, space or not, but, when we replaced them, I said, let's look at the serial number and see what year they were put in. They were put in 1999. So, I mean, we've got some old equipment here, and things break, and you just gotta take care of those things from time to time. But you're correct, the tennis courts do need some work.
My question on that though is basically anything that happens is gonna be an assessment. There is no cash reserve or
It,
I mean,
on an
it's-
expenditure of
it's
that,
major.
on an expenditure of that size, yes.
everything's gonna be assessment.
On an expenditure of that size, yes. Yes, sir, Mr. Burke.
Do we, like you talk about air units or refinancing, are we putting those things out for bid? Do we put those things out for bid?
As far as the air units go, Saul, our maintenance guy, has
Right.
worked through different folks.
Right.
And from my understanding, and I've asked the question too, are we getting the best deal? And he's our guy, and he says we are.
Well,
So-
I understand that, but there is a big difference in the units in this town and the heat and air companies. There's a big
We got
difference.
3+ bids for those.
Okay, as long as you're getting
Yes, sir.
bids, I have no problem.
Yes, sir.
And then when you're refinancing through the banks, are you going through one particular bank, or are you putting it out there for all the banks?
We're going through Pinnacle Bank,
Okay,
and, they've been very competitive over the years, and have been very good to this club.
well, I ran into that several years ago. And
So,
it came in, and the club had done business with the same bank forever. And we put it out for bid. And we had 3 bids. But
And we can do that,
Yeah.
but what I'm gonna say about that.
I'm not saying they wouldn't give you the best bid, but I'm just saying it looks better if you do that.
It does look better, but I'm gonna say this about that relationship. They've been with us when times were hard,
That's right.
and you don't kick somebody to the curb, basically, or, you know, when you got somebody that'll help you, that's willing to help you. And, I have ideas about what these rates should be,
Yeah.
because I see them a lot. I'm on the bank board, just like I'm on this board here, and in another area, so I kind of know what the rates are out there from a long-term perspective. And I've got people, you know, I was talking with Dickie the other day, we were talking about maybe a different way. We presented, this 20-year AM, but there might be another possibility, another way that we might think about, refinancing this debt, since the Fed's probably gonna drop rates a couple times this year. And, we might go a different route if we're able to do that. But, you know, we're gonna look for the best, most reasonable rate that we can get.
One other thing. Have you all considered how much revenue will be lost this year with the drop in membership?
With a drop in membership.
With a drop in membership.
Okay.
In other words, people getting out.
Yeah, we've been pretty consistent over the last couple of years. Thomas will go through this in the annual meeting, but we hadn't really lost that many members.
Well, I understand that, but you've had a big increase in dues in the last 3-4 months.
Yes, we have.
So, you know, I'm just putting that out there.
And I appreciate that. We
Okay.
haven't, we've done this budget to remain steady state, with the exception of those 11 new members that we're projecting. I think we'll get more than 11,
Okay.
but you don't want to jack it up too much. You know, we got 12 new members, I believe it was this year, regulars, 14 new regulars this year with a closed club. And, you know, when it gets golf season, Thomas gets calls most every day about new membership. It's just, why would somebody pull the trigger in February when there's ice on the ground to, you know, to join? So we're watching that, and if we, you know, if we run into a situation where we do have that, I mean, we'll try to make changes as we can, you know, as far as expenses go. All right, it is 5:46, so we need to transition to the annual meeting, and I don't know if there'll be additional folks come to the annual meeting or not. If I don't see a lot of additional folks at the annual meeting, we're gonna flip through these financial slides really quick, because we did say that we would cover the financial statements at the annual meeting, but Thomas will have one of the regular emails that come out to you and a link on it to where you'll get this presentation. You'll also get the presentation for the annual meeting. And if you want the financial statements, we'll send you a PDF copy of those, or if you don't want a PDF, we'll print you one off down in the office. Go see Carol.
Now, one other question,
Okay.
I've been a member out here a long time. And I've been a member out here a long time, and we've had a lot of good workers out here. And this man right here is definitely an asset to Stones River Country Club, and I want everybody to know that.
Thank you, Mr. Purple. I appreciate it too. Tim, did you have a question? You were raising your hand.
I just, hate to ask a question, but don't know what I'm talking about, but I get used to it. Marty, you push some, ratios up there on debt and equity and all for the bank.
Okay. The debt service coverage ratio?
Yeah, if you've gotta have $500,000-600,000 for the tennis court, and we're getting ready to refinance, I know you thought about it, could you speak to that a little bit?
Yeah, we're not gonna sign any contract on anything till we refinance this debt. Okay? We're not gonna do anything like that.
You couldn't roll it, wouldn't be a good time to roll it, look at
We
it?
could think about that, but refinancing this debt is extremely important right now, and making sure that we're, you know, that we're set on that. So we're not gonna do anything before, you know, before April for sure, because we'll get this debt redone in March. But we hadn't decided, hadn't gone through long range, hadn't done any of those things. So, you know, Tim, I understand your question, but, you know, the decision hadn't been made on the courts.
Don't have a question, just have a comment.
Yes, sir.
I'd like to remind you that under the current bylaws, you can't have another assessment until next February.
Well, we had an assessment
I understand, but the bylaws say you can't have two assessments within a 12-month period.
we did the assessment in 2025.
But you had one in January that was done in 25, but it was another assessment in January.
The assessment was payable in January, but the assessment was made in 2025.
Well, I think it's when it's paid is what you go by.
Okay, I'll go back and take a look at that and make sure that's the case.
But that's not a voted on assessment.
That's correct. That's correct. That's a board assessment, yes. We'll take a look at it, Mr. McElroy, make sure we're right. All right, we're gonna transition into this annual meeting here in 11 minutes, so.